So the story behind this is 2016, probably the last week before the election, decided, you know what? I'm not very smart, and I want to know what's about to happen to the economy and investing and lending with this new president. So let's get a bunch of smart people together in the room and have a discussion. And I didn't know where to host it, so I called my buddy Matt, who was with First Tennessee at the time, and said, hey, do you got a little conference room where you go host here? I'll buy some sandwiches and bring us some drinks, and we'll just, talk amongst ourselves, so to speak. And I made a call. I don't know what made me go do this. I just kind of bold. I called the office, the economic director of Nashville, and said, hey, can you come down? We got a small group here to talk about what's going on. And he actually showed up because I'm actually giving the same talk to a group of like 400 attorneys tomorrow. So this is actually good practice for me, so I'll come down. It's like, cool. So we got a private room with 20 people with the economic director. And basically his advice was buy a bunch of real estate in Nashville in 2016, and I didn't do it. So
so we're doing it again.
So there you go. But this time around, obviously 2020 happened, so we didn't really have anything in person, but this time around, it's like, I'm going to plan a little bit further ahead and actually get some really smart people and get a bigger room. And we've got almost 80 gals and gals RSVP for this, and a lot of you showed up in spite of the rain, traffic, and all that. So thank you so much for coming. It really warms my heart that you guys came. Hopefully you come with questions. So who I am and how do we get here? Well, I'm Billy Brown. I'm the founder of the Investors Capital Group. We are a small boutique commercial loan brokerage. We also educate, do a lot of education. I got a newsletter, and I'll talk about that later, as well as do events like this. And we place loans for small businesses and small investors that are trying to go acquire, assets. Because why? Well, inflation, that's why. And we want to get rich, right? Wealthy. I'll tell you more about a story there, but let's kind of get to know you guys first before we get further into this and introduce the panel. All right, so how many of y'all are actually Nashville natives? Okay. How many Nashville natives? Okay, we got some unicorns here. All right. Four. This is amazing. How many of you guys are not from Nashville? Nice. All right. How many are here that actually don't live in Nashville right now or Nashville area? No.
I live south.
You kind of count. I count that. It's part of the MSA.
Middle Tennessee area.
Yeah.
Talk about how state.
Yeah. That's, which Columbia there? What is it? The economist guy. I think he's counting. He's counting Montgomery County and now you guys too as part of MSA. So it's after Edsel. Edsel's name. That's a joke between us. All right. So I'm going to tell you guys a story here to kind of get into this thing. So all right, how many guys know about the Bluebird Cafe? How many guys have been in the Bluebird Cafe? The real one. How many of you guys know that they actually have the Bluebird music riders around at Dyer Observatory here at Vanderbilt, like right up the road? Have you guys been up there? Phenomenal. It's a little hidden secret, not anymore because I just told everyone about it. There's like local to Nashville, instead of going with the crowd of all the tourists with Bluebird Cafe, you actually have season tickets, and it's up on this beautiful mountaintop with the observatory, and it's very intimate, and it's basically a giant tailgate. It's so much fun. And 300 or 400 of your favorite friends are up there, and you just serve food. So anyway, one of the reasons I'm telling you this is after all the musicians come up there, the riders around kind of like this, you get to go tour the observatory and see whatever planet, star, whatever they're tracking up there with some really smart people. So you're standing in line. One time standing in line, and Rocky, and his actual name is Rocky, is one of the astronomers there, and we're standing in the hall, and it's like this old 1950s. It feels like a compound, but it's old 1950s, like a university type of building. So it's just dank and whatever. That's some pictures up there. So we're walking by, and I'm looking at this picture, and I'm like, dude, that is a really cool picture. Rocky, what is this? Rocky goes to blow my mind so big, it was hilarious. He goes, all right, this right here is from Hubble telescope. Put your thumb up like this. Okay, cool. All right, now do a pinpoint. Okay, so let's see what's that. That's one pinpoint. That pinpoint right there is that galaxy, which is, I wrote this down right here, 150 million light years in diameter. And this galaxy is 2.5 million light years away from us. And I don't know how many trillions of stars are part of this thing, but I lost consciousness after he started doing this because it was so mind-blowing. I'm like, And I'm pretty good at following, like asking follow-up questions and listening and all that. And I just sat there with like a dumb expression on my face going, Rocky, my mind is so blown. I can't, I asked another question, what do I go with this? Like how's like a normal person that's not an astronomer actually deal with this? And he just laughed and walked off. So it's like, I don't know. So the reason I tell you that is investing in our market and monetary policy is a lot like the universe. It is like so vast, so big, expanding so much. Like there's no way that one person can be able to understand all of it or ask follow-up questions. So especially me with a very small brain. So that's why if they say something brilliant and I just go like brain dead, I need your help. Okay, you guys agree with that? Okay, so please ask an intelligent question because they're going to blow our minds here. So let's get started here. Why are we here? Why do we invest? Shout it out. Why do we invest?
Well,
What else?
buy time.
Okay, what else? You know,
Keep our money from melting away.
what's that?
Keep our money from melting away.
Yeah, pretty much.
Preserve it.
So I mean, the bottom line about investing is we're trying to invest faster than the point of inflation and to get away from taxes, right? The two crippling things to our monetary policy. So we can actually go enjoy it, and when we're older, like we don't have to work, right? Or hopefully younger, like a lot of you guys. So the reason we have these panelists up here is we got a few, I say sectors of like investing and economy and whatever, but just trying to get some different ideas and discussion points on this. We're not selling anything. It's for educational purposes only. We're going to discuss anything you guys want to discuss. We have really smart people here. I'm going to try to ask the best questions I can, but this is where you guys come in. So again, the investing part. So we have, let's see here. Let me go and introduce everyone here. And I got some really good tee-up questions here. So we'll start with, I hate to like throw him under the bus here, but the boring banker.
The typical bald guy,
Yeah.
the banker that
And you're not wearing a blue blazer.
I'm not.
I'm really kind of disappointed.
I decided to go against the grain and
Yeah.
hang up my blue suit for the day.
Yeah, there you go. So it's
It's actually the picture though. So
I mean, Matt's wearing a gray one here.
he's
but-
changing it up. Changing the game.
So we got Eric here with First Horizon, and then we got so first off, this is not Leah Wald. This is even better. It's Josephine Saffert, the International Woman of Mystery is what I call her. But Leah is she is so disappointed. She's the economist and background in economy and also the soul strategies. But she got sick and her two-year-old son got sick as well. So she hates to miss this, and we'll just have to send her a video. Say hi, Leah. Sorry you missed this. But Josephine Saffert is here in Nashville with
Sapphire Development Group.
Sapphire Development Group. What do you, and we'll get into this a little bit, but what do you do?
Yeah, so I'm a residential and commercial real estate developer. So we focus on the 10 to 15 minute core around Nashville primarily. And so currently working on the first brownfield side, turning an industrial side to 32 townhomes. So everything so far has been very much like turning things into townhomes or like horizontal land development.
How long have you been doing this?
I started 7 years ago. I'm German. I immigrated as a real estate developer. So 2019 January, got my green card as a developer. Oh, so officially I can still vote. So
You still
I
can't?
cannot vote yet.
Okay.
Yeah.
Oh, that's another thing. We're not going to ask people who they voted for, but we will ask them who they didn't vote for.
Truly Swiss.
Yeah. So we'll get in a little bit later, so hold that thought. And then next to Josephine, we have our Atlanta resident here, Jordan Kellerman, and he's with Peachtree Group. And why don't you tell him just a little bit about what you do before what Peachtree is, and we'll actually ask better questions here in a second. So.
Yeah, hey guys, great to be here. We're real estate investors based out of Atlanta, where we invest up and down the capital stack. So on the ownership side, we're predominantly focused in hospitality, where we own and operate over 100 hotels all around the country, primarily Marriott and Hilton branded assets. And in that portfolio, we grow it through not only acquisition, but through development as well. We're very active. In fact, we're getting ready to open up our Hyatt Caption in the Gulch, which should be open up in about 5 weeks. So I was touring it yesterday. It looks amazing. Really excited about that property. And then lastly, we're vertically integrated, so we manage all of those properties in-house, which really separates us from a lot of our competitors because hotels are very operationally intensive, selling one-night leases. So bringing that in-house allows us to really drive returns for our investors. But the bigger opportunity today, which I think we'll talk about a lot, is on our credit platform, where we can finance groups just like us to go buy and build and renovate and refinance, but not only in hospitality, but across all commercial real estate asset classes. So we act as a bridge lender in that facet, and there's a lot of catalysts that drive the need for private credit today. And in the most interesting times, especially in periods of volatility, which we think is today, we have the ability to buy distressed debt from banks. So we'll work with banks just like First Horizon and Eric, and we'll actually buy loans off of their balance sheet or from private lenders, whether it's distressed debt or.
Let's hold off the details real quick. I
do a lot of different things.
I got a lot more questions for you. We got details there. So
Cool.
He's so much more exciting than me.
Yeah.
Well,
We like real estate, all facets,
You like-
up and down the capital stack.
yeah. I'll
So-
guess it. Yeah. I wish that was on video. That was so good. And then last but not least, we have Dave Birnbuam, who is what's Coinbits. So give a brief, less than 1 minute overview of that, because we're going to go dive deep on this thing. I really like what you're doing.
Sure. Coinbits is a on and off ramp to Bitcoin. So we integrate with the banking system. So anything like banking rails like ACH, wires, and then we help people find Bitcoin liquidity at the best prices. We can also help them get out of Bitcoin if they need to. That's sort of how the guts work. I used to work in Silicon Valley, so I'm more on the tech and product side of all of that. And we also invest a lot in Bitcoin education, newsletter, original research. We look at the health of the Bitcoin network, and also how it is correlated or not correlated to other assets, how macroeconomy is sort of affecting the Bitcoin market, and how Bitcoin plays a role. We can talk about this later, but I think that it's important that we kind of contextualize Bitcoin as a technology that's complementary to some of the other technologies that are that are growing in these next 5 to 10 years. We're going to see an energy renaissance, and Bitcoin plays a major role in energy development. And we're going to see an AI renaissance, and Bitcoin has a large role to play there as well. So it really is the future of value transmission over networks in small and large amounts. And so that's what I think about all day.
And there's a reason why he's been smiling all day, because what's Bitcoin right now?
Well, we're hoping that during this session it hits 100K. If it does, please somebody stop the panel and let us know.
If he's retiring.
I'm just gonna leave. I go straight to El Salvador.
He's going to buy real estate from his buddy next door.
Yeah, no kidding. That's what are you gonna do with that money? I'll buy real estate now. Okay, cool. All right, so we'll get back on track here. So, I mean, we got the gamut here, and the reason I wanted to kind of set this thing up is I wanted people to kind of understand, especially myself, because I'm curious from the growth of small businesses, which First Horizon lends on, maybe retail, call it the retail business owner. Like what are their struggles at to people that are developing into buying homes or moving here and buying stuff from Josephine to they need with Jordan here they're needing capital to go buy bigger things and repositioning some of these troubled assets to now we got this now it's a gorilla in the room. There's Bitcoin. Like we need to have a discussion about that, and there's some people that are just like, yeah, it's still a phase. It's still fad. Like it's, a lot of bankers too. Like this is, they're gonna put their heads in the sand. They're gonna wake up and be absolutely irrelevant, very, very quickly if they don't get a hold of that. What is Bitcoin and get ahead of it? Now, I like what you're doing with the banking side of stuff. Like how do you go merge those two? Because you do have to have those on and offs. All right, so we're gonna do some layups here for some of our first questions to get to know each other. Because I know any of these people, the panels and whatever, these panels are so freaking smart. It's I don't know, I can't relate to these people. So we're gonna do some layup questions. So you feel more comfortable talking to them, and I may answer a little bit later. So first off, 2 quick questions of who are you, and your hometown, and what was your first job?
Okay. Eric Olson. My hometown is Detroit, Michigan. Lived a whole bunch of places. You ready for this? This is awesome. Yeah. My first job, I was a nanny.
You're what?
A nanny, but a guy. I took care of kids.
Oh my God, I can totally.
Until I was 20 years old.
That totally makes sense now as a banker. So that's just.
Yeah, just boring as usual. So I ran Best Buy stores for 16 years,
Okay.
and then kind of jumped into banking, finance. I grew up with a CFO as a mom, and the fear of God and credit, and finally that took over. And
Oh, wow.
So decided
Okay.
that banking was my world.
Okay. All right, we'll get to this
Was
much
that less
later.
than a minute? Was that?
That was good. That was
Okay,
good.
cool, cool.
Yeah, we got a lot of questions, I know. So, but all right, Josephine. So, who are you? Where's your hometown? And what was your first job?
So Stuttgart, Germany is hometown, and first job was as a 13-year-old building the little like 3D models in an architecture shop.
Yeah.
Cool.
Nice.
Straight line through to today.
I know. Just still, I
Still
know.
building
Full
things.
circle.
I'm Jordan. I'm from Miami, and my first job was selling life insurance as an 18-year-old with Northwestern Mutual, trying to tell people how to financially plan as a kid. So that didn't go over so well, but good start.
I'm Dave. I'm from San Diego. My first job was actually, I worked at a law firm, and I was officially the law librarian and wine cellar manager.
Wine cellar manager
They had a lot of
at a
wine.
law firm?
They had a lot of wine, and I had to go choose which one to serve when they had clients come. So
So you're like the youngest sommelier there was
yeah,
in California?
I was in high school. Yeah.
Wow.
But I was mostly not doing that. I was mostly doing law librarian stuff, which is a lot less exciting.
I can see where law and wine mix there, so that's good. All right, so we've got a couple of questions here. So here's the other question that we kind of get into that's more pertinent to this. What was the most pivotal moment in your life that led you into the asset class business space you're in today? What was it?
Oh man. I don't know that I was ready for this one.
I know. That's why it's a panel. And that's why
I think,
Kamal is.
so in the small business world and kind of where assets are imperative and there was a huge impact. I mean, this is going to sound terrible and you're going to be like, really? But COVID, and the reason is PPP loans, and one that exposed us to everyone under the sun, because people were like, well, what was that like as a banker? And I said, it was like the government saying, there's free money, call your banker, they know what to do. And we had no idea what to do. So I think it was pivotal because if you cared about the people in front of you, you had to figure it out. And you had to figure it out every night, and then every morning it was different again. And maybe you saved jobs for a couple months, and maybe you saved companies. But we did a cool thing scorecard-wise at the bank where it said, not how many PPP dollars you funded for people, but how many jobs they reported,
Oh, yeah,
and then how
that's
many
good.
jobs you saved.
Yeah,
And I think, it wasn't that long ago, but it was pretty pivotal and impactful.
yeah.
So
Yeah, that's good. We're getting that in here in a second. Since that's why I brought you on. It's like that ground floor, Main Street.
Cool.
Josephine.
For me, it definitely was the immigration journey. So I have a finance background, had out of college, just offer on Wall Street. And ultimately, they couldn't figure out the sponsorship. And so it was either you figure it out entrepreneurially or you go home. So for me, it was very out of necessity, essentially. And that's how I ended up ultimately in development. I briefly had joined a tech startup in New York, kind of learned the fundraising there. And then from there, moved back to Nashville 2017. And so it was a very much a roller coaster ride. And that's kind of how I ended up where I'm at today.
Mine was a moment where my whole life I wanted to go work on Wall Street, and I landed my dream job at GE Capital up in Stamford, Connecticut, so down the street. And I get there, bright-eyed young, and I realized that the next 30 years of my life was going to be Excel spreadsheets and PowerPoints. I'm really not going to be making any decisions for decades. So I quickly pivoted into real estate, fell into hospitality and hotels, where you can eat there, you drink there, you hang out there. There's just a tangible asset, and I said, this is it. And also helped that my first job as a hotel consultant at a school, I was working on luxury hotel properties in the Caribbean, especially one in Curacao. So I was like, I can get used to this. So that was kind of like, I'm on the right track, and I've kind of stuck it through on the hospitality and real estate side since.
Nice.
That's cool. So my story, I worked in Silicon Valley in technology for many years, and I was really inspired by the idea that technology is going to allow us to transcend our limitations as humans, and we would merge through the internet and be able to pretty much do and be anything. And there was a very optimistic vision of the future that was sort of undermined and eventually evaporated by this model, which is that everything on the internet has to be monetized through people's attention. And so then they brought in all the psychologists who built Vegas and built Facebook and all the other platforms based on this concept of monetizing attention and making people addicted to their screens. And I kind of lost my sense of optimism about tech, and I really thought there was no hope. And when I learned about Bitcoin, I realized that that is actually the technology, the tool that we will use to completely change the game and the world economy. It's a sound money, and it allows for human flourishing in a way that I think I had always hoped technology would. So at some point it became untenable to really do anything else, so I pivoted over to Bitcoin.
That's fascinating.
You should answer.
Oh, I haven't answered that. I think, okay, that's good. All right, so who am I? I'm Billy. Hi. I am actually from Stillwater, Oklahoma. I've been here in Nashville for 21 years. And my first job, my dad actually owned a tire warehouse. And I was unloading tires in these big containers of trucks, probably when I was starting like 9 or 10 years old. So I was like a 9 and 10-year-old with like big old calluses on my hands because he forced me to work in the tire factory. So most pivotal moment, this is kind of fun because we're recording this. So I was trying to get into real estate investing, and I was doing some residential lending. And I was seeing my friends who were idiots, and they were actually self-confessed idiots, buying these apartment buildings and investment properties, whatever. And I was like, y'all can't even add 2 + 2. How are you doing this? And they said commercial lending. So I started actually looking into it and having to learn it. A mentor of mine named Yogi Dewar kind of taught me, and he's brought me up and taught me a lot. So that's how I got where I am. So yeah, it was tires that got me. You guys smell tires? Like I have like PTSD from smelling a tire. Anyway, okay. All right, so I want to actually go reverse here. So in 30 seconds or less, why Bitcoin?
Well, I mean, I think we should step back and talk about the election, and Bitcoin is a long
30
story
seconds, man,
itself.
30 seconds.
I'm sorry? Well, so, I mean, why Bitcoin now, I think, is really the critical question. I can run through the history of Bitcoin for you if you'd like, but we are, with the election, entering an era of, I think, great uncertainty. In the next 6 months, things will settle and there will be kind of dust kicked up and eventually it will settle. Whether it will settle in the favor of people in this room is a question. No matter what happens with Trump's policies, whether they be good for the economy or bad for the economy, in both cases, we can expect pretty intense inflation, I think. And I think that's a wide consensus at this point. And so you would expect asset inflation in either case. And Bitcoin being a liquid market that operates 24/7, that is now going to be adopted by nation states, like the biggest economy in the world, the United States government, may adopt Bitcoin as a reserve asset in the next 100 days. You would think that Bitcoin would have a greater role on the balance sheets of institutions, central banks, pension funds, and so I think that's we're at really this critical moment. And Bitcoin's historically volatile. It may continue to be volatile, or that volatility may start to become dampened, which I can explain as to why that could happen. But yeah, that's sort of where we are. We're sort of at this inflection point where it goes from a fringe asset to a guy was just elected partially on a Bitcoin platform and partially even funded by Bitcoin Wealth, which is pretty insane.
That's pretty crazy. We'll dive deep into that here in a second. And, well, not too deep, but we'll touch on it. All right, Jordan. So give us the why. Why are you in your asset class?
So real estate is an excellent creator and store of wealth, particularly today. On the private credit side, we're lending against assets that have a tremendous need for capital. Today, you've never seen such a discrepancy between the supply and demand for capital, with over $1.5 trillion of commercial real estate debt coming due over the next year and a half, and the regional banks who primarily provided that liquidity in the space ultimately pulling out of the market. It's given the ability for groups like us to step in and fulfill that need, where we can generate outsized returns at very limited risk profiles against these assets, where typically we're lending against 60 to 70% of the asset value, but we're generating returns in the upper teens, even sometimes low 20% range. So the risk-adjusted trade in real estate right now is probably greater than it's been in my entire career.
All right, Josephine, why your asset class? Why are you building homes?
Yeah, I think that Nashville is still very, very young. I've lived in a lot of metropolitan places, including Beijing, Munich, New York City, other cities. And I think that, when you look at Nashville, downtown actually just has received a really true grocery store in terms of Publix or Whole Foods about 4 years ago. So when you just let that thing sink in, it's pretty wild, actually. We're talking about the $1 billion Oracle campus. I think there's just so much still room to go in Nashville itself. We have industrial still downtown. The river obviously is just starting to be utilized. We don't have enough density. We have an affordability problem that can only be resolved by increasing higher density. So, development is obviously fascinating from that standpoint. I think that it is a developer's playground. And so it's been really exciting, and I think it's going to continue to be exciting for the next 20 years.
We got a lot of people moving here. There's no more land.
That's the other part. I mean, when you look at as a whole across the U.S., Nashville is super favorable, right? I mean, we don't have an income state tax. We still have really good outdoor, opportunities where you can get out into, the lakes and the forests and whatnot. But you still have a metropolitan component to it. So you're not fully shut off of everything else. So we have a huge economy. So yeah.
All right, Eric, why business banking?
I think it's a lot of the reasons that kind of everybody mentioned, and those pieces all make up the business owner, kind of in the space that I live in. So the 5 to 35 million in annual revenue. And I think that access to capital is still one of the hardest things for people to figure out, even in that space. So people ask what I do every day, and really my job is to educate people. Yes, I do loans. Yes, I do SBA loans. Yes, I do owner-occupied stuff. But at the end of the day, I'm here to educate you and help you access capital. And we were talking about it earlier. Sometimes it's through me. Sometimes it's through a partner. But in Middle Tennessee and Nashville and Tennessee, because of how we are from a tax perspective, it's advantageous for business owners to be here. So I think just teaching people how to access that capital and how to manage it once they have it is just really imperative. And I get to do that every day.
And then we'll talk about this in a second, but the access to capital, whether it's debt or equity, I mean, you can't, in this day and age, you can't save your way into prosperity. And we'll talk about that here in a second, but you have to go use other people's money, unfortunately, to go keep up with everything else. And that's great if you know how to go do it. I've got a lot more questions for you on this to tee off on, but let's talk before we get into the big elephant in the room. One more question for each of you guys. What is the most important factor in our economy today that you are concerned about and excited about? Just real quick, and you can't say the I word yet, because we're going to talk about that in a second. But what are you concerned about? And what are you excited about?
I think one of the ones that Jordan and I talked about earlier as well is just people's ability to repay debt is a concern. I think banks, it creates an opportunity for his clients, but for me, the concern is those notes that are coming due that we're going to have to extend or renew, and we're not really sure if we're going to be able to do that, because a deal at 4%, 5% when you originally bought that building or all that equipment at 8% might not make sense. At 7% might not make sense. So I think the concern, can I say interest rates? It's
Yes.
another
Yes.
So I think, everyone's waiting for the floor to drop on rates. And I think, we know that the Fed has priced in another, 25 bips. But I think at the end of the day, one, people are starting to realize that if to grow your business, it was a good deal at 6%, well, it's still a good deal at 8%, and it's still probably necessary at 12% if you need to use some type of alternative lending, or at 14% maybe. And I think them realizing that as long as they have the ability to repay it, it is imperative, because they're stunting growth and stopping growth as a result.
Yeah, I use that phrase every day on the commercial lending side, as the ability to repay. And that's you just have to stick that in your mind, the ability to repay. How is the cash flow coming in to go pay for this debt after expenses, not before, but after.
And people in this space, in that world that I live in, don't realize that their personal debt is still a problem comparatively, that we go on a global.
Bleeding out the other side.
So your business looks fantastic, but if you bought your 4th Raptor and your 5th Lambo, like, yeah, that's probably a concern.
Stop
for
at
me.
2.
Yeah, 2 is good enough for most people, so.
All right, Josephine, what are you concerned about and what are you excited about?
I think concerned about like really the inflation number. I think like, when you look at the official inflation number of what, like 2.4 or where we're like right around.
Allegedly. Allegedly.
So I was just about to say, I think that's the official number, right? And I think we all know that, especially in a city like Nashville, that is absolutely not the case. I think like also just how the inflation number officially is made up in terms of like the components that really, build that number. I think it's a little bit of a media piece because I think we all know that the unofficial inflation number is a lot higher. So I think that is a big concern, just affordability. We're seeing it left and right. The salaries obviously are not going up with the same growth rate. So when you look at that deficiency, I think like in our space on how we develop properties will have to evolve. People are looking to find ways to offset their mortgages, right? So how do you get people into a home? And I think coming from the European economy, it's a renter's nation in Germany. And I think the US is headed that way, that it's becoming more of a renter's nation. Home ownership is going to be becoming tougher and tougher. So obviously as a developer, the build-to-rent communities are really interesting. But also, I think in the last years, up to 2022, we've seen builders and also developers, putting together floor plans that were just not necessarily functional. And now that's been scrutinized. You have to design really functional spaces where you can have, some guest suite or something that can be rented out. Just getting creative with, okay, how can you design a space that actually, solves the need to offset the mortgage payment.
Yeah, because your starter homes right now are $700,000, $800,000. What's the starter home now?
It kind of depends. We just had this conversation the last week. Ironically, for it's a townhome listing that we have. I also own a brokerage that I just acquired 3 months ago, and one of the people that we were talking to basically said, well, the alternative is to buy a Ryan home for $300,000. So to that point, there is an opportunity to get in at the $200,000-$300,000 level. But it is a small place, right? It's not necessarily for a family. So it just kind of depends on what the expectation is. But I think what I'm most excited about, to answer your question, I think is really, getting more creative with designing spaces that people really want. And I think there's a lot of room for improvement still.
Real quick, those that are Nashville, how many of you guys have toured one of her homes yet? I need to. I have, yes. I was only video, but I can't wait to go see it. But you can go. She's she's very smart about how she does it. So, all right, Jordan.
We're most concerned about inflation and interest rates. That's what takes up a lot of our time. Inflationary concerns, rise costing of goods, outpacing wage growth could lead to a slowdown in near-term economic activity, which a recession would adversely affect everyone up here except maybe the Bitcoin guy. So he's having the week of his life. So
far.
And the impact of inflation and interest rates, because real estate valuations are based off cap rates, which move in tandem with interest rates. So you've seen interest rates rise up, but you haven't seen cap rates rise at that same level. So we think we're going to see further cap rate decompression, which is going to erode values. So in today's market, what you're seeing is values eroding due to these higher cap rates. And these groups have not materially enhanced their NOI, their net operating income. And now that these assets are worth less than what they were because of that decompression in cap rate, they now have to go refinance their debt with debt that's almost twice as expensive as when they borrowed 3, 4, 5 years ago. So all these catalysts, are really lining up to create some serious distress in their
cash in refinances or giving back keys or selling to Jordan.
Taking keys. Banks are trying to offload this paper before these loans go delinquent. or we're trying to recap the borrower. There's a lot of ways we can get involved, but this is the biggest concern that we have, which is all ties back to inflation and interest rates. Now, what I'm most excited about is the ability to invest in real assets that can act as an inflation hedge. So real estate historically has acted as a great inflation hedge, especially in hospitality, because we can reprice those rooms every night. In multifamily, you can reprice that lease every year. So you can typically outpace inflation, which they have historically. But slower moving buildings like industrial office, where they're 5 or 10 year leases, they may not be able to keep pace. So I really like the ability to invest in real assets to offset that near-term concern with inflation and ultimately the lasting impacts that interest rates will have over the next few years.
I would say almost the same thing for me, actually, but just in different words, because you're exactly right. I mean, thinking about the macro side, so if what Trump and his administration is trying to do with the United States economy, you guys have seen Indiana Jones, where he has to come and he has to like take the thing off and put the other thing on, so Trump is trying to do that. It's incredibly risky what's happening, right? But I mean, they've floated what is called the ultimate tax cut. They're even talking about 0% income tax, replacing all of revenues from taxes with tariffs. So if that were to happen, again, extremely inflationary, because now it's going to take a long time for manufacturing to reshore and our industrial base to build back up. We're going to do more mining and so on. That's great, but it's going to take 10 years. In the meantime, goods are going to rise in price. Now, if you can offset that with a reduction in income tax, and maybe you're making twice as much, so you don't care if your bottle of water costs twice as much, right? But you still have an inflationary environment for assets. The scary thing is that, you know, Trump is kind of set up to succeed, but there is going to be everybody interested in perpetuating the current unjust system of finance and debt is going to try to undermine him. And the perfect way to do that would be to raise interest rates. We have, over the last couple of years, funded the government with T-bills at a rate that we haven't in a very long time. I think 22% of our deficit is now T-bills, which means short-term government debt that's a year or less to maturity. And that has taken place at the interest rates we have today. But if they raise interest rates and all of those T-bills have to be refinanced, all that debt has to be refinanced at a higher interest rate, you're going to have a real problem. And if we have so much debt that we're now paying more to service the debt, we may have to borrow to service the debt, and then that's the debt spiral that kicks off, you know, basically constraining your policy options, and it's going to be really hard to get anything done because there's going to be chaos in the economy.
It's SVB at a grandiose level.
So that's the scary thing. The thing I'm excited about is that we have real assets to invest in. I think that, I know that Bitcoin is also another hard asset, like real estate, like gold. It can't be inflated, it can't be confiscated, it can't be manipulated in the way that some of this other paper wealth can be. And so if during this time of great volatility and uncertainty, everybody from, you know, large investment funds, banks, but also individual savers, lower middle class people having access to sound money, it's the first time they've ever had access to that. You know, they've only ever been able to save in cash, and now they'll have access to sound money. So I think the future is bright, but it's also very, I suppose, uncertain in terms of how it will play out and how painful it's going to be.
All right, so this is the point where there's like a whole bunch of questions I have in my brain just going crazy. So if you guys have anything, like let me know, I'll run through and do it. Yes, ma'am.
Just really quick, so are you saying the Federal Reserve will raise rates? Is that?
No,
Well, the question is, will the Federal Reserve raise rates?
I don't know, but so my understanding of the dynamics of this, and I could be wrong, and I know that you know this stuff too, so tell me, is so there is fear and uncertainty that is perpetuated either justly or unjustly by the media, by international interests. Bond investors get spooked because they think, oh no, interest rates might rise. They start selling their bonds. The supply of bonds goes up. Yield curves go in the opposite direction. Interest rates go up in a self-fulfilling prophecy. And then if interest rates go up to, you know, I think J.D. Vance recently said 8%, that's like the threshold for debt spiral. So that's the worst case scenario.
Also, what long-term investor wants to lend into an inflationary environment with a real inflation rate of 8-10%, and get a 4, 5, 6%. No prudent investor's going to do that. And so, it doesn't matter what the Federal Reserve does. That's a fake rate really between them and their member banks, period. It
doesn't necessarily affect the everyday borrower.
It doesn't, except for liquidity. If you raise the Federal Reserve rate overnight to 12%, then you're going to suck liquidity out of the market because all the member banks are going to say, I want to put my money with 12%, zero risk, zero hassle. You'll suck liquidity out. If you drop it to zero, they're going to say, well, there's no incentive to put it with it, so then they'll push it out. But there's this middle ground where it really doesn't affect.
It's the teeter-totter, like how much, the
it
milk and
doesn't
cereal.
affect the Joe Blow on the street.
You don't think they could continue to lower rates as well as do quantitative easing to increase the money supply? I mean,
Oh, yeah, they've done that.
All right, so,
that's their guidance rate.
It's all
Yeah, but
set.
do they want the economy to be healthy and Trump to be
so
successful?
hold- so-
I mean,
so-
I don't believe that the Federal Reserve is apolitical. I'm sorry, I don't buy it for 1 second. So.
all right, so we'll save that topic for the table talks afterwards. So let's take a quick poll. How many people think the Federal Reserve will lower rates in 2025? How many think they will raise rates? Ooh. I've been calling for rate raises for a while. I think I'm praying for lower rates, but I think they have to keep rates high, especially with Trump. So anyway, that's my 2 cents. Personal opinion, wait a minute, it's my company, never mind.
Interesting that the room is split because that shows how uncertain things are.
Yeah.
We're all seeing different angles on the problem, and it's
Well, I
It's
think
gonna
a lot
be-
of
it's
it
gonna
is-
be wild.
A lot of it is so event-driven too nowadays, right? I think there's a wild card, and I think we entered like a new era, and I think people are still trying to figure out how to deal with that.
Yeah.
Especially in like the sense of also technology, AI, and obviously like blockchain.
So here's how I see this play on my mind. Is the ICLC stuff. So you think about this. You get people that need to move to Nashville. Well, we'll start it this way. So you've got a business that's growing. They need capital. How does the inflation in interest rates affect that? So I'm a business owner. I've got my gross revenue is 5 to 25. I'm hiring people because so many people are moving here.
You're paying them more than ever.
They're paying them more than
retain
ever.
them.
And I've got orders at the yin yang, but I don't have enough capital yet to go do it. So they come to you to go either refinance my building, to have working capital, whatever. How does that affect, like on that street level of what you're seeing? Like, are you able to help them, or like, hey, sorry, or is this the banking environment right now is like, not say anti-business, but they can't because of inflation and market forces.
And I think there's even more to it than that from a loan to deposit ratio, and banks trying to be careful with what happened to SVB. And so, when you take the business owner,
Wait, pause.
slow it back and roll back to what you asked. So,
So it's a pause real quick.
Yeah.
So tied into Bitcoin here real quick. Do you guys count Bitcoin as a reserve?
No, it's so crazy. You can't get a mortgage. You could have like $10 million worth
Yeah.
of Bitcoin and you can't get a
So
mortgage.
That was my question.
Yeah.
Do you ever foresee a time when Bitcoin will be collateral for a loan?
Absolutely.
yes.
Yes.
Absolutely. Actually, BNY Mellon was recently given an exception to the rule that banks can't custody Bitcoin. There's been this rule, I can't remember the name of it. It's a banking regulation that banks can't custody Bitcoin. They were just given a carve out, which is, again, this insider dealing that happens in DC. But banks are actually the perfect vehicle for helping people with custody. I know that you know that custody is kind of a pain in the butt. And like custodying Bitcoin is going to be something that everybody needs to be able to do. And including businesses, individuals, banks, what are they good? They're good at. They're good at holding assets, keeping them safe in vaults and so on. And then they're good at making loans against assets. Banks are perfect for that. They just need to, and actually banks, they have, like as we're hearing, their business model is like not that compelling, right? They're just not making very much money anymore. But Bitcoin allows them, there's tremendous opportunity. If regulators would get out of the way of banks, they could flourish and actually rebuild community banking.
Yeah. That's actually one of the questions. Well, we're not going to be able to cover that today. It's like regulations, but so sorry to cut you off there.
No, you're good.
So it is. I mean, it's a market force there. You know, you have people that are like, I'm not going to lend you my money, which the deposit is at 2% or 3%. When I go put in Bitcoin, I made 40% or more since October 31st.
I think the technology component is the limiting factor. And for clarity, as someone who is regulated very heavily, this is my opinion. This is not the bank's opinion. I think we covered that, but just to say it out loud again.
Whatever CYAs are out there, just assume this is
All of those
CYA.
things.
Yes.
But as someone who owns Bitcoin and as someone who has a life in technology and loves AI and wants to see all of that succeed as well, and someone said something really awesome the other day. It's AI won't take your job, but someone who understands it could. And I think that's one of the most profound statements, that understanding how it can and make your job easier. And it goes back to Bitcoin, and it goes back to understanding truly how it functions and how you hold it and how you secure it. Because one of the biggest things, banks deal in risk. What we do is risk. Is this loan risky? Is this Bitcoin risky? Is Eric being here risky? So at the end of the day, I think the most imperative thing is to look back and go, do we understand it? And if we don't understand it, then we're not going to touch it. And I think
a confused mind does not act. So
correct. And I think that's, as we see politicians age out, and as we, for lack of a better way to put it, and as we see some groups that aren't willing to engage it and understand how it works, until we see that change or someone being willing to look at it as a true asset, then it's not going to be.
So hold on. I want to try the Bitcoin the world here. Is like we'll tie all this together.
For clarity, I agree with you.
Yeah, no. So it's what I was saying is, like, we're tying the inflation together with what Eric's doing with the small business owner of trying to hire more people to go fulfill his orders. He has to go borrow money. They have to go borrow money from Eric. They're tied down because of inflation, because interest rates are
Their house
high.
note's more, their milk is more, their note from me is more, because rates are higher, because they're trying to grow. And so many business owners want to try and bootstrap it all, which is commendable. Great. If you can bootstrap it and never have to borrow money, fantastic. That's great. But generally, they always hit a point where you can no longer bootstrap it and you have to borrow. So do you? Can you? Is the bigger question, because cost of living is higher and inflation drives all of that. And so those notes that we would have made 2 years ago, we can't make now, being in the risk business and looking at the client across the table and going, you can't afford this. You could have 2 years ago. You can't today. We have to do it different.
Yeah, and the lender is your friend, by the way. So I'm a commercial lender, so I say this often. The lender is your friend. They're trying to keep your ass out of trouble.
Right.
So, but at the same time, you've got, this is where it all ties together, because you're helping these businesses be able to hire more people, which they have to pay them more, so they can afford Josephine's house over here. And if this doesn't happen, Josephine can't sell a house.
It's cyclical.
It's cyclical.
It's snowball.
Yeah, and then there has to be higher wages to go attract this. Otherwise,
$700,000 starter home.
Yeah, and then do they have a disposable income to go to these hotels instead of the Marriott? Otherwise, these things are going under because people can't go afford, because the business can't grow. And at the same time, you're like, well, if I'm a business owner, should I go? Ask the questions like, should I go expand my business or just put it in Bitcoin?
And so, and I'll be quick, but that is the for lack of it's the doom and gloom of what we look at every day. And sometimes the answer is, I always tell everyone, it's not no. It's maybe not right now. It's maybe not tomorrow. Maybe in 6 months. Sometimes that's the solution. We have been lending. Some banks haven't been. Some banks have had to reel it in even further than we have. We're doing SBA lending. We're doing conventional lending, but we're doing it with a little bit different mindset than we maybe would have 2 years ago.
And that's good. I mean, and you guys jump in here. So this is the part where we're starting. I just want to tie that together. Now we can open up and go.
I would like to add to the discussion of why also banks are not necessarily able to use Bitcoin for underwriting or as a collateral. So I just had this come up about 10 days ago. It's an asset. It's about 2.8 million. We have someone that wants it, but they want to basically buy it in Bitcoin. And so the question basically was okay, well, is this possible? Is it not? Right? Well, a bank, in order, just generally speaking, if a bank, provides a loan or anything, they need a title insurance, right, to even like go through to secure, or yeah, to lend, basically to close the property.
Sure.
So I think like a component that a lot of people miss is that with Bitcoin, you're essentially not able, with a traditional title company, to obtain title insurance. So if there is a way, I think the true problem there, like kind of chicken egg type situation, that once you have a digital or a title company that supports digital assets that can actually provide in some sort of fashion title insurance, then I think it would open up the banking side as well.
Is that price risk
So-
when you say title insurance?
They just need a market maker.
Right.
Yeah, so essentially, but the title companies wouldn't do it, right? Like, so I think I think there's just like that component that,
Yeah.
like if you're trying to now pair it where, for example, you have a down payment in Bitcoin, right?
Yeah.
Then you can't like necessarily like lend.
The buyer didn't want to convert to cash?
Correct. No.
Because that's the
No.
piece. If you convert it to cash, then it's true. Then it's the recognized value and
They didn't want to have trigger capital gain.
Well, capital gains will be triggered if you change control of Bitcoin anyway. So
if you report it.
you pay capital gains at the book value of Bitcoin when you move it. But I mean, I was just going to say, I really do think it's regulatory, because I talk to bankers who are not as risk averse and who do understand Bitcoin and they can't use it. I also know of Custodia, which is a small bank in Wyoming, and the CEO of that company has sued the Federal Reserve because of, again, the Federal Reserve has not allowed her to have a master account, even though she laid out her plan, and she plans to have, I believe, $1.10 worth of cash for every dollar of Bitcoin that she holds. So in other words, it's like over collateralized, and they still won't give her a master account, and they won't say why, but then like friends of friends, like little banks get master accounts. It's totally corrupt. And I do think that banks are, I talk to bankers who are like looking for things to do, like they have no options. There's nothing that interesting. They're looking for new businesses. Their clients come to them and are like, can you help me with Bitcoin? And they're like, I can't touch it, because not only is there regulation, but there's what's called over compliance, which is like this mind virus that has taken over the financial industry. So over compliance is, I get the feeling by the public statements of these politicians and regulators that I probably shouldn't touch it because they could come after me later, even if it's completely legal to do it now. And it's different from like, when you go file your taxes, a tax accountant, a tax attorney will find loopholes for you. This is the opposite. I won't step through any loopholes because they could always like retroactively get me. Like the government is so overbearing on the financial industry that innovation is almost completely stifled. So Bitcoin's been able to happen like completely separately. I believe in the next 4 years, post-election wealth summit, right? I believe now we're going to see this integration of the financial industry in the United States and digital assets.
Well, it's already coming. That's why I wanted you up here, is because it's market forces. I mean, even back to the capital markets, what Jordan deals with, it's where you put your money. If you've got cajillions, and you have more money than God, like, well, why would I go lend out at, 6 or 7% lend to you guys when I can just stick it in Bitcoin and go make 15?
Josephine, the answer to that is your buyer moves their Bitcoin into a trust, assigns the beneficial interest to someone who wants to buy Bitcoin, right? And they just buy into the beneficial interest of the trust, no capital gains.
They escrow it.
Did I hear a banker approved?
I won't say approved. I think that there's ways to make it happen. And I think it takes someone.
That marketplace is not developed
Well,
out,
right.
but you could definitely develop a platform.
There's ways to strategically ensure that both sides are represented that would allow those transactions to occur. But I think regulatorily, I think people are afraid.
Cap gains makes it really hard. So when you go and buy, there's food trucks that accept Bitcoin. I sometimes buy sliders and beer with Bitcoin. I have to report that as a capital gain or loss at the end of the year.
So it's $700 snack there.
It's if you pay less than a penny, it's still reportable. So that needs to go away. And there was a bill last year, actually it was a bipartisan bill, it was a couple years ago, a Democrat and a Republican drafted this bill that would have created a de minimis amount that you could spend Bitcoin. It was $600. That would have made a huge difference. It didn't get anywhere. But we need something like this in order to create this sort of smaller economy as a medium of exchange. It would be great to actually completely eliminate capital gains on Bitcoin. I'm not holding my breath, but it would be wonderful.
Yeah. Oh, we got a question from the audience also. He helped put this on, so.
Just quickly, what concerns do you have from a nefarious use of Bitcoin, any type of fraud that could happen, or the exchange of the currency with parties that you may not want it to exchange with? Just regulating, because I totally understand the idea of deregulation and the idea of not being tied to the Fed, but what are your concerns with Bitcoin? What are the risks outside of it falling in the hands of those that may want to do others harm or something along those lines?
Do you mean like individual network participants, or do you mean like the entire network is taken over? Both?
Or just the inability to track those funds over time, or who it exchanged hands with.
If a bank were able to utilize it, how we would
takes away
recover and
AML.
protect ourselves.
Right.
Right.
Yeah.
Okay, well, Bitcoin is a public ledger. Bitcoin, well, I'm trying to gather my thoughts because I'm like, how radical do I want to be?
So it's a credit, like tracking it for.
Sure. Bitcoin is a public ledger. It's actually more trackable than fiat currency, and the vast majority of terrorism and money laundering and human trafficking is all taking place with fiat. So Bitcoin is an improvement over that. Now, actually, I'm concerned about the privacy of Bitcoin. It's one of the holes in the entire thing. Bitcoin is not private by default. So if you aren't trying to be private with Bitcoin, you're being extremely public in a way that you're not with fiat. So it's important that Bitcoin technology is improved, and there are improvements that are coming down the line in the next few months, even to years, that will fix this. I am not a big fan of. I think that transaction privacy and transaction freedom is a human right. It's like speech. And so when I hear that question, I would relate it back to like, how do we make sure people don't say things that we don't approve of? It's related. It's transaction privacy. And I think that ultimately the reason the government couldn't just take away all our cash and say that everybody has to use our ledger, the reason that would be politically untenable is because the government knows that the citizenry wants financial privacy and that is a fundamental natural right. And so the fact that like that dynamic even exists, it opens the question of like, what is money laundering? Money laundering there's actually an article in American Banker, which is an incredible thing that it got published there, that was titled Money Laundering is Financial Thought Crime, right? All it means is that a transaction is censored or forbidden because of a statement, because of a policy, because of a law that may or may not be in the best interest of
Because the bureaucrat says it.
So
It's like weed versus alcohol. One's legal, one's not. Why?
Because it is. And you can argue about it if like but I mean, and I'm sensitive to the idea that money laundering laws do a lot of good. I understand that. But financial privacy does a lot of good, and I think that people have a right to not be surveilled, and they have a right to transaction freedom.
All right, so we're getting close on time here to end this. We could go on all night. This is fascinating. We did go down a trail, but it all ties together. Like you have market forces within Bitcoin, within this digital currency market of wealth that now you have to square up with our legacy monetary policy. How do you go square that up, and how do the banks do that? And so let's kind of get off that path a little bit, and let's look at what are some things you're inside your business that you're watching right now that could be concerning, not necessarily exciting and not excited, but concerning, but also you're also positive about, like within, let's just call it like the home building, Josephine, because they started talking a lot better. But what about you? And then we'll look at Jordan as well. Give him more time. What are you concerned about within the home building world and what you're doing?
Yeah, I mean, cost of capital, interest rates. I mean, prime is 7.75, and then depending on what bank you go with, is 0.5 or 1 point. So the cost of it is massive. Especially you still have like elevated like land prices, construction costs that haven't come down.
How much have construction costs gone up on you in the last 4 years?
Oh my God.
Double.
40 to
Yeah,
50%.
I mean, yeah.
Not quite, but
Yeah, I mean, massively.
Yeah.
So, I mean, but cost of capital, I mean, we have some units where, I mean, we've paid, I mean, like 9.5% interest rates, right? Like, for, like with a traditional bank, just like on construction loans. I mean, obviously, like on my end, like, I started 7 years ago, so, I've not experienced a downturn, and I'm definitely learning my lessons also the hard way, right? We always underwrite conservatively, but obviously, I mean, we've been paying our out.
Yeah,
So-
it not only costs you more to build, but also costs you more to carry it, and because of that, it takes longer
Right.
to go sell.
Right.
Because
Well-
Eric's not lending money to businesses. So just kidding.
Like the days on market have prolonged. Like, so what's been really common, especially like in the residential world, is realtors list a property, take it off market, relist. So when you look at days on market, like from a CMA standpoint, like it's fully skewed. Like you actually have to normalize it. You have to literally go into each basically listing in itself that closed, each comp, and then look at like what really the facts are. So, the days on market is a huge issue, again, driven also by affordability. And then the other part is rent prices have softened, obviously, tremendously, and sales prices overall, too. I saw like just this week, I guess, like compared to like last year, we're up 1% in terms, I guess, like in Nashville, Davidson County.
Well, so on our old day with rents down 6%.
So the average, like, sales price seems to be up.
Oh, sales price.
Yeah.
Yeah, so, yeah.
I think it's a problem on like, the salary side, they have not come up with the inflation side, and then, given where, the cost is to build ground up, it's at a full impasse. So I think you'll find like creative ways, where people like have roommates, people, again, rent out rooms or like space in their house, and just getting more creative with it.
So I mean, that's everywhere for the businesses. Like, it costs you more than it ever cost before, but you can't charge more because people can't pay it because they don't have the income, because they're also paying that. So now the valuation of a business, a piece of real estate, all that, it has to come down. So before we get to Jordan here, how many guys think there's going to be deflation? Where
Bitcoin terms?
Well, yeah, I mean, will the income come up enough to cover the inflation, or will prices and valuations come down?
I think
Prices are never coming down.
the problem is businesses can't even afford it.
Ownership to those who can actually afford to buy,
Yeah.
and everyone else can be marginalized into a renovation.
Yeah. So yeah.
Eric made the point too, as well, like on the salaries earlier. Like now, I mean, when you really try to find like top talent, and you hire, I mean, it's wild what it now costs to like really hire talent, but at the same time, that's still not sufficient. I mean, I think right. I think like Nashville, like 5 years ago, someone probably could have a pretty good life at 80,000 downtown. I mean, that same situation
You can't
now
let any
today
out for that.
is probably like 120, minimum 150, and like you're just getting by. And so when you look at like actually, so I have one factor that I wanted to stick it just because I thought it was really interesting. So we have several properties right now that are 1.4 million, great locations, deep in equity. And the fascinating part is that when you look at a traditional like home mortgage now, 20% down, a person buying these has to have about 350 to 400,000 of household income.
Wow.
Now, just to give you perspective, in the whole Nashville area, that's 2.9% of the population. So it's about roughly, just to give you an idea, about roughly 25,000 people. And just to take it more macro, when you look at the U.S. and you look at like an average income of 180,000, you're looking at about roughly top 10% in the U.S. Okay, so we're talking about a household income of 350, 400,000, we're talking about top 5% in the whole U.S. So basically the same amount of funds that, would have gotten you a $1.5 million home 3, 4, 5 years ago, I mean, that pretty much like just not minimized, but to like 40%. Like, so, I mean, yeah, I mean, it's just half of the people basically now could afford that same type of deal.
But
the interesting fact is when you look at, the construction levels and the features of these homes, someone that is making, let's just say 200,000 a year or 250, even like from a household income standpoint, they don't necessarily want to have a $600,000 or $700,000 home that's basically in an up and coming neighborhood that is, Bordeaux or like, somewhere East Nashville, depending on which area, zip code 207. They want to have the $1 million plus home, right? Because they have great careers, they're VPs, they're, but it doesn't compute anymore to like where it is today. And so it's really fascinating.
So that ties into disposable income. If you have to go pay, twice as much for your mortgage to stay in the house you need to, so you don't get, what, and East Nashville, do you have disposable income to go, do your vacations, go to Marriott's? Yeah. So which leads to that. It's like, what are your headwinds? Then
can I just add one more thing?
Quick,
sorry.
Yeah.
Just I think the only way to overcome this truly is I think to really make bigger bets, and like we're also invested heavily in crypto. You got to figure out like, okay, how do you outpace basically like the inflation and like everything that's going on, the costs. And so anyway, so I think like in our like age now, like we've got to figure out like, how do you get creative?
Under the current unsound money system.
And
the current monetary system creates speculative game worth out of us all.
Yeah, and and back to her, because she has to borrow a lot of money to go build. Well, that banker that's lending her money, it's like,
I want to add one thing, and I don't want to disclose what bank it is, but basically some bankers in terms of construction loans, they are taking crypto in terms of like on your personal financial statement and whatnot. So like actually on that end, on the construction lending side, it does play a pretty significant role because just like across like, obviously developer space, I mean, we're feeling somewhat comfortable with like, well, we don't think it's really risk. We feel comfortable like with that type of crypto space. And so a lot of developers, are like also in
what
crypto.
What discount are they doing? 30, 40% of stated value?
No discount.
wow,
Really?
no discount.
No discount.
Wow.
Not from what I've personally experienced.
That's a statement right there.
That's good.
Where they take
Yeah. Jordan,
So just to build on that, it's a function of supply and demand. So my rebuttal to you would be how many new home developers are building these $1.5 million homes, because there's only a very select buying pool who can actually afford it. So I would be surprised if new supply deliveries is tracking to what it was, because I feel like that would dwindle down. And it's probably pretty capital intensive on your balance sheet to carry these homes. It's very hard to raise equity, it's very expensive to get debt, so it'll mute your new supply. We're seeing a very similar phenomenon in the hospitality industry, that demand metrics are still growing strong, 2 to 3% a year, and this is on a national scale, but new supply is growing at less than 1% because it's so challenging to build, it's so expensive, it's hard to raise debt. So you still have underlying fundamentals. Now we did get overheated in certain markets, especially over the last run. Like Nashville has been one of the top MSAs in the country over the last 15 years. But you had such a strong wave of new supply and hospitality come in that it's affected the top line for hotels. If you look at RevPAR, which is revenue per available room, it's top line for hotels. Nashville is generally down 20% this year. And it's not because rates are down or demand is down, it's because new supply has taken such a hold that it's pulled back occupancy. But the counter side of that is if you look at the new supply pipeline now, we're finishing off that current wave, including the hotel that we're opening in a few weeks. Coming in behind this, there's not very much coming in. So you kind of have a moment for the market to recalibrate. We're doing the same thing in markets like Dallas. We're building an Uptown, which Dallas is also a top 5 MSA. Uptown is like the Gulch in Dallas. It's the premier, white collar submarket. There's almost no new hospitality supply coming behind us. It was very challenging to get a loan, and we have a very deep balance sheet. We built 50 hotels ground up, and it took us 9 months to find a bank that'll finance this asset. And it ended up being a very deep relationship depository with that bank where we could.
It's very sticky, wasn't it?
Yeah.
So if you're like a small business owner investor and you're having trouble getting a loan, don't worry. Even they had a trouble getting a loan too. So it's difficult.
the small business space, not like even hotels, but and I think a lot of banks are doing this, but it's pretty common for a bank to ask you to move your deposit relationship if you're doing
All of it, right?
Yeah, it's pretty.
Not just operational, just all of it.
It can vary slightly. The general rule is that they want to see all of it, and there's really, it helps offset some of the cost if we have a thinner spread like you were talking about, and then it also, allows us to kind of see the performance of the business. So
Keep track on it. It reduces risk because you see the in and outs. Yeah.
It reduces it exponentially, and usually you can pay less for capital if you're able to do that too. So.
Okay. All right, so we're at 5:30, so we can stick up here as long as you guys want to and answer questions. We can talk about ourselves. If you guys have any like any pressing questions right now, any questions? Okay, go for it, Cliff. Hold on. Let's get this on here so we can actually record this.
So I had two questions regarding Bitcoin. One, with the way things are going right now with the ETFs and the United States talking about putting at strategic reserve, do you think that'll level off the ups and downs? It's typically, it's peaked like a year or so after the halving, and then it'll come down. Will that even that out a little bit, you think? And then two, do you think with the ETFs, do you think derivatives markets will start playing in this, manipulating price any?
Yeah, those are both going to affect volatility, I believe. Bitcoin options trading was just recently approved by regulators. And what that does is allow for kind of continuous price discovery and deeper liquidity. So you would assume that would reduce volatility. And then you would also assume that if we do establish a strategic Bitcoin reserve, which is different than a stockpile. So Trump announced that he wanted to establish a strategic Bitcoin stockpile that would be held by the US Marshals, and that would just be all the Bitcoin that is sort of confiscated by law enforcement. They wouldn't sell it. That wouldn't affect demand by nation states. But if it is a reserve that as sort of encapsulated in the Bitcoin Act of 2024, which is a draft bill by Cynthia Lummis in the Senate, that would authorize Treasury to buy up to 200,000 Bitcoins per year for up to 5 years. And that would sort of create
Holy moly, how many?
200,000 Bitcoins per year for 5 years. So it comes out to, I think you were saying 5%, you did some quick math, 5% of the overall supply, which is around the same as the amount of gold that we hold in the United States. So they're kind of
allegedly
trying to meet parity with that. I'm sorry?
Sorry, I had to,
It's allegedly.
I had to throw that in there, allegedly.
So, but in that case, you have a buyer of last resort, and also in that case, you may trigger really a international game theory dynamic. Other countries also have money printers, so if they believe that United States will buy Bitcoin at any price, they might want to buy it faster. They might debase their own currency to do so, and then Bitcoin does eventually become a reserve asset for other central banks. Very hard. The only thing I want to say is that Bitcoin always does what you least think it will do. So I hate to prognosticate about it, but it is fun to talk about these sort of dynamics.
It's a thing. I hate it's not even come close, but I look at the phone here. What Apple did with the iPhone and everything that came off the derivatives of the products that came off of this.
Yeah.
The things that are about to come off Bitcoin is going to dwarf this, absolutely dwarf it. Which it plays in everything else here. So, all right. Any last questions? I know, Jordan, you got to go, or can you stick around just a little bit?
I'm just standing up just to stretch the legs.
Okay, all right. You can do some burpees if you want to. Any questions?
Yeah. Well,
You got a question?
chamomile tea.
Oh, sorry. Hang on. Hold on. I can't run. I'm poor handy. Here you go. You don't need that, Ken.
Hey, this kind of goes to any of the panelists, but your take or the future of the tokenization of assets, whether it's real estate, any type of asset out there, the future of that, if you have any thoughts or input on that.
I think isn't there an incentive now to digitalize or put
there's
the title on the chain?
Yeah, there's this idea of real world assets, RWA.
Yeah, what I mean is that if you take an apartment building as an example, and you're raising money for it, you're a qualified purchaser or accredited investor,
it
really limits who can jump into the deal. But once it's tokenized and then just selling off basically token values of it,
It's almost like small shares of a.
It's like shares,
Yeah.
right? So that's sort of like a financial innovation that increases the efficiency of the market for that asset. See you later. I'm not an expert in that. I would say that's probably an incremental innovation. It's not really like a revolutionary innovation. It's just sort of like we're going to build better software to control markets and trading, and great. There will be some efficiency there. If there's fewer middlemen and less inefficiency there.
And Carl, I've seen some people try to do this and tokenize real estate, which makes it from a private placement standpoint be able to it's illiquid on your balance sheet, turns it into liquidity if you want to sell small portions of investments of what that is. But I haven't seen it gaining traction. It's a great idea. It makes sense, but I don't think right now I've seen anything actually execute on it in a big enough way where it justifies the expense of putting that together. So
the price discovery of that asset is so wild.
Yeah.
Most people aren't experts on that asset, on that street corner.
Yeah.
So what's it worth? Who's pitching it?
That's interesting.
And then you can tokenize it. You can get in for $100, but what's the liquidity of the marketplace of the tokens after it's fully funded?
How many? Yeah.
Who wants to buy it after that?
Yeah. There's nothing to say it is something. So
Right.
you go sell that piece of that token.
Has it been oversubscribed by 300%?
Yeah.
So it's effectively.
I mean, people were buying the monkey pictures, right? Like,
Yeah.
throw it out there, but.
Talk about money laundering for criminals. I mean, that's basically what it was, and setting your own prices. All right, we went deep into Bitcoin there. I'm not going to run back there, Terry. You got to yell. I'll repeat it. What is it? What's your question?
Don't you think it's going to take some of the private people to go renegade and start taking the Bitcoin to start financing these deals to keep it going on?
Ooh, what comes first, the chicken or the egg? Is it the market forces of people wanting to do this and forcing the government into it, or will the government do it first?
Regulatory authority.
Yeah, the quote authority.
The fear piece that he was talking
Yeah.
about. Like, are you willing to reap what you sow? Are you willing to jump out and do it first? And if you are your pocket's deep enough to cover yourself if something bad were to happen.
I don't know. I think it's going to be market forces because the government's slow as can be. Even with Trump saying he's going to, I think it's going to be the force coming to Eric going, all right, hey, I've got $1 million in Bitcoin on my balance sheet. You can't go do this. I'm going to go find another lender that's going to go lend against that. And somebody's going to be able to go, you know what? I may not price that, at a prime plus, but I may price it a little bit higher than that for a discount. Yeah, discount the value of that.
There aren't that many bearer assets that are nobody's liability. There's gold. There's U.S. Treasuries, which technically is a liability, but is not treated as one. And there's Bitcoin. These are the three money pyramids that we have. Today, the U.S. dollar, treasuries, dollar-backed treasuries or treasury-backed dollars are the global currency. So we already have one currency. Gold doesn't really play a big role. So there is one currency. It's the U.S. dollar. It's backed by the ability of the U.S. government to inflict coercive violence on taxpayers. Which is,
ooh, that was good.
That's what it is. So if you don't pay the ability of the United States government to extract taxes from its citizens is what backs the dollar. What happens if you don't pay your taxes? You're going to get letters in the mail. They're going to ask nicely at first. They're going to ask meanly second. And they will eventually put you in a cage. They will eventually put you in a cage. So it is actually coercive violence that is pretty much like directed at the taxpayer base of the United States government, of the United States citizens. That is what backs the global currency today. Bitcoin is backed by energy, which is a whole other thing. We'll get into it. But we have that situation now. The way that we protect ourselves from things like 15-minute cities and so on is we need strong cryptography, and we need that to be the standard way that we communicate value, which is with Bitcoin, words, which is with cryptographic protocols that we can communicate with each other without surveillance, so that we can build trust networks that are opt-in. So instead of coercive, we opt into these networks. We can use Bitcoin if we want. We can use this app if we want. I can talk to you. I can text you. Nobody has to know. We can share ideas together and create a network. That's what we need to do. The technology exists. It's actually pretty widespread at this point. There's 100 million users that are estimated to use Bitcoin worldwide, which is a huge number of people if you actually think about it. It's just we're at this inflection point. That's why Bitcoin is going from 0 to 1 right now. It's because education is growing. It's like there's an education asymmetry here where, you know, I live in this space, so I keep forgetting how this is new information to like so many people every single day. And once you get into Bitcoin, you typically don't get out. It's a one-way street. So you can think of Bitcoin as sort of like a black hole for capital and liquidity. Any excess liquidity is sponged up into this asset that is finite. And the only thing that can change when demand goes up is price, because supply can't change. So we're in a very special moment in human history. I don't mean to be like dramatic, but it really is insane that we get to live right now at this moment where all of human society is transitioning from the old system to the new one.
And we have access to it.
And we have access to it, and all we have to do is opt into it. It's not that hard.
Don't forget silver.
Yeah.
What's that?
Don't forget silver.
And lead. Jordan, what's the end game here with, whatever you want, like tie it in Bitcoin, tie it in real estate, tie it in debt, whatever.
Me?
What's the end game?
Yeah, I'm hardcore real estate. I'm an eternal optimist. The public equities market has been on such a tear recently. Bitcoin's up 50%. That I think there's some volatility on the horizon, like a global political event could drive us into very event-driven that someone mentioned earlier. Like, this is a really great time where you can reallocate and kind of take gains and place into real assets like Bitcoin. And in real estate, energy is a really great space, uranium, nuclear, moving into infrastructure. I think the market's pretty frothy. If you look at like PE ratios on the public companies, they're pretty overstated. You have an inverted yield curve, which is predicated a recession every time in history. So I think everybody's in pretty good shape right now. The economy is strong. Today is a good opportunity to almost reallocate and move into some non-correlated investments to reduce exposure there. And a lot of these non-correlated asset classes are actually performing very well. It's just very hard to talk about anything besides the stock market, which is up almost 30% year to date, and Bitcoin, which is up, almost 80% year to date, right? It's just very hard, but a disciplined investor will still diversify and balance their portfolio so that they can lock in some of these gains and protect themselves against volatility on the horizon. So on the real estate side, I live, eat, and breathe in that space. Personally, I invest in Bitcoin. I'm trying to do other real assets as well. I have a lot of gold and physical silver, which I've been banking on. Yeah. So I think we'll have a really great opportunity. We have access, in today's day and age, you have access to all these different investment types at your fingertips. You can do it through a phone or through a phone call. It's very accessible to everyone. And you may or may not even have to be accredited to access a lot of these investments, which makes it very, very easy for people to participate. So don't miss this opportunity. We're all feeling really good right now. We're all very optimistic. There's typically a post-election euphoria, which we're all feeling right now. So take this opportunity to really protect yourself and set yourself up for future success, despite the macroeconomic conditions and what can happen in the world. Because if you watch the news cycle, it's so polarizing. There's always something ending the world on one way or another. So I think we're very well positioned today to take advantage of these different topics that we spoke about.
Josephine.
Yeah,
I think. What do you think?
Yeah, I think, so I agree with Dave. I think we're really entering this new era. I said this earlier too. I think, there's such a massive change and obviously the market cycle. And I think, just even by history, we're about to enter this new market cycle. And you only have that every 8 to 12 years. So I think it's a massive opportunity to kind of reassess where the opportunities are. I think you're going to be able to pick up great assets at great prices here in the next, we're already starting to see some deals, but the next year plus. And so I think what I've also seen is that there's kind of a new way of doing business. I've seen it a lot in Nashville especially, is really through community. So, obviously we all gathered here together. You've done a great job summoning people. And so, I've seen people partnering up to buy assets, obviously, and you have your syndication model in order to get in. And so just really surrounding yourself with others that are looking for the same thing. I very much believe in the cryptocurrency, or more so from a technology standpoint, funny enough, actually covered blockchain as an equity research analyst, like literally in 2016, briefly. Wish I would have gotten in at that point. But yeah, so I'm pretty excited. I think especially Nashville will have massive opportunities to come.
Well, I mean, my personal opinion, we'll end on this, is like anything. Like they're going to continue to, print more money, borrow more money into existence. You have to buy assets somehow. What does that asset look like to you? I mean, everything. I mean, 4 years ago, we weren't talking about Bitcoin. We're talking about businesses, real estate, other little things around here. Now we're bringing Bitcoin in because it is the new, not saying it's an asset, but it's also a technology that helps us with our wealth and how we go create wealth and store wealth and value wealth. And it's going to be, the implications of this is going to affect every single person in this room. How we borrow money, how we build houses, how we think about cities, how we do community, how we build businesses is all predicated on us and how it all ties together. So I don't know what the end game is going to be. But that's why I created this panel, because I don't know. I want to learn. I learned so much here from this group. So give everyone a hand here, like, for their time. I appreciate it. And we just don't know. There's more questions than our answers. I mean, the only answer we know is, like, you got to buy assets, and you can't save your way to prosperity. Even y'all borrow money. You're bankers. You borrow money from deposits, and it's like, hey, yeah, here you go. But that's not going to work anymore. So stay tuned. But I will end on this. We have a couple of housekeeping things here. So we've got this recorded. We'll send you guys a link out, probably on YouTube, like how this all, to link to go share with your friends, all that. We're going to stick around. If you guys want to stick around and ask questions, have another drink, we're probably got this in our 30, 45 minutes. Was this beneficial to y'all? Was this good? Yes. Would you guys want to do another one maybe in the spring? Something like this? Yes. Good. We had Jordan back up here. Josephine's around. So
I'll come around.
Yeah.
I spent a lot of time here.
If Bitcoin hits like 125,000, Dave's not going to be around. So
I'll buy the whiskey next time.
He'll be good. But I literally have 3 pages of questions. We didn't even get to like any of those because of the conversation. So thank you. We're going to stick around and answer your questions. And thank you so much for coming and fighting this and fighting traffic.
Thank you, Billy.
So appreciate it.
Yeah, thanks.